This AMD looks a little bit promising right now. Maybe needs a little bit of work to do here before it's quite ready, but so far hasn't been able to break out yet, right? Out of this inside, or sorry, out of this 15 min range. So we can get a pullback, right, back down towards sort of that, moving average, right, something along those lines. Then there's an opportunity for us to be able to push this up towards sort of that $87 barrier, right? Nvidia continues to show us sort of that outlier strength. So kind of both tell. Yeah, beast. Absolute beast. Very impressive. Huh. Volume too. But this is not scary as heck. Much rather focus on this instead. Spy can be a nice breakout on some vol, right? I mean, this could be back in play. Not bad volume there on AMD. Better. Maybe we're back in business here potentially. So target's right, 88 bucks. That'd be interesting. So, okay, if I can get that tennis ball reaction into that zone, yeah, okay, would be interested. Under 87.20. Yeah, and could look at like the 86 calls, the 87 calls, maybe even the 88s if that's if you want to be that aggressive. I like the volume the best on the 86s. But honestly, the 87s, even the 89s are reasonable enough. Moral of the story is you got 2K volume across the board there. So just a question of which one you think is most affordable for you. And then my entry, right, would be under 87.23 here on the underlying. The stop loss, like just under that 87 mark. So we'll call it like 86.95, something like that. Might not happen here now. Of course. That sucks. All right. So again, right, pass the burn it on to a longer time frame. Man, these days where it melts up and it doesn't want to pull back into my entry zone are the most frustrating. Okay, so SPY, right? If you can give me that, again, need a high volume breakout here. If I can get a look within that context, then yeah, very much interested. 4 minutes to go on this candle. Want to see it bigger than at least this sort of range here, right? That we've seen established since the opening bell. So I need to see good enthusiasm. Otherwise, it's not going to be in play, right? AMD, no longer really as interesting because it's not giving me on these longer time frames, right? Breakout real confirmation. And then fake out on that 5 min. So it's not exactly convincing. I'm more now focusing on the index level and seeing if this thing can give me a bit of a pop. Right, SPY stop loss would have to be sort of this, 414.60 area, right? First profit target is going to be 416 here at this point. Maybe we'll get through that, right? Where we can then go to that 417. So just draw that line out just in case. So here becomes our range, right? We need to get an appropriate pullback within that zone. Otherwise, there's very little interest. Good volume, right? 2 minutes to go. Pretty good volume pace. Let's make sure it sustains, breaks, and closes with that enthusiasm. Okay, so, broke through that 416. So, gives us a better opportunity. Now, right towards that 417, need to see a pullback, kind of around this area here. Where all of a sudden, right then you're risking, 70 cents to make $1.60. Maybe you can go even a little bit tighter. Where if you go down towards sort of that 415 barrier, right, get a correct reaction there, then you're risking, 50 cents to make $1.70, right? So a little bit more interesting. As for what strike, right, I'd be probably targeting like tomorrow's expirations, right, 417s. So generally, my target is wherever my first profit target is. That's generally the strike price I'm going for, and then I'm picking whichever one around my first profit target has the most volume. So maybe the 416s have more volume, right? Maybe the 418s have more volume. So I'll play that instead. But it's always first profit target generally is going to be the strike price. Strike price closest to that, and then I'll filter for what the volume requirements are. Generally, my standard, Michael, is 2K contracts or more. So I generally want to see 2,000 traded or more, and then a spread of less than 2%. It's okay. It's okay. Let's see if I can get a pullback here towards that sort of 415 barrier. And what we've been seeing happening here, unfortunately. Oh, no, there's no worries at all, Michael. What we've been seeing happening here, unfortunately, right, is things breaking out and not pulling into my entry zone. So if it wants to break out here without getting to my entry zone, nothing I can do about it, right? If it's not going to follow my rules or wants to run, frustrating, annoying. But I can't chase this thing higher, right? So there it goes. So pass the burden on to a longer time frame, right? Wait for this 10-minute candle to close. Tesla, if we can get a high volume break, close and hold here. Above, right? Didn't quite give us that close and hold. Oh, kind of a frustrating day. Really, just really annoying when, yeah, things give you confirmations, give you everything you're looking for, and then can't get the risk reward ratio you want. Annoying. Well, I'm not sure if it's not. I don't know if it's profitable or not. I haven't back tested 1 min time frame, so I don't know. Right? I would generally suggest that it's too noisy, at least for myself. I find that those 1 min candles create more FOMO for me than anything else, where they look a lot bigger than they actually are. So generally, right, my objective is to find my perfect setup and to sort of ignore as much sort of other noise as possible. And I just find that with that 1 min time frame, I'm probably not gonna be able to filter it out appropriately. So it's not that it can't be profitable. I'm sure it can be, but just for my own personal strengths, it doesn't really suit my personality. So same thing here, can right, wait for an appropriate pullback into my entry zone, right? Kind of around that 415 area. So I need a dollar pullback, right? It's pretty aggressive at this point. Um, yeah, for me it does, because what it did is it gave me that fake out higher first. So if it wants to now break out, right, I need to kind of see it like break out of this bull flag before willing to do anything. If it didn't get, like, if this was an inside bar and then pulled back, then yeah, I'd be happy to jump in here. But because it gave me that fake out higher high first, right, my basically first profit target would need to be that 87.80. So it slows me down. Oh, another higher high. Man, nothing wants to pull into my zone here today. It's really annoying. Yeah, I don't know if it's necessarily panic buying. I wouldn't say that's necessarily a fair description, right? This is good trend continuation price action, right? It's, giving us the same narrative that, we got established yesterday with the news, right? With FOMC and then, price and volume. The issue, right, is that sometimes things are going to break out without following your rules, right? If you can't get that risk reward, then you don't have a positive expectation of being profitable on that trade. So yeah, that's just the way it's going to go, right? Our technique, our strategy, our core concepts aren't going to always be rewarded in the market. And so we can't then panic buy, right? Trying to chase a move because we think it's going to be green, right? Our edge is only profitable if we follow its rules perfectly. So that means, right, waiting for that pullback into a risk reward zone, right? That means sizing your position appropriately. That means, right, waiting for the right risk reward to kind of sync up, right? That justifies your historical win rate. And everything else, right, unfortunately means that you don't have a positive expectation of making money. So if I chase a breakout here, okay, yeah, maybe today it would have been rewarded, right? Okay, it would have been up 50% or something like that. But if I take this trade 1,000 times, I don't have a positive expectation of being profitable at the end of that period. So that essentially implies, right, that I need a bit of luck, right? Or I need to be lucky to be green within that context. So if I want to be a consistently profitable trader, I can't rely on luck to be what makes me green, right? I basically need to stack the odds in my favor as much as possible so that it's my execution, it's my strategy, it's my technique, it's sort of my willpower, right, to follow my rules that makes me green, not sort of relying on sort of an impulsive move from the markets. So it is what it is, right? Just because things, move without us doesn't mean it's panic buying, doesn't mean it's weak price action, doesn't mean it's XYZ. It just means it didn't follow our rules. So if it doesn't follow our rules, gotta let it go, right? I am sitting on my hands like with every ounce of body weight I have to prevent myself from doing something stupid to a certain extent, right? Because yeah, when your thesis is correct, when every trade you could have taken would have been green by a lot and you're not in any of them, well, it sucks, right? It's a terrible feeling. But what my objective is to avoid a fake out like this, right? To avoid a situation where it goes up 5% and then sells off 20, right? So I just want to put myself in situations where I consistently have a positive expectation of being successful, of being green. And so I cannot compromise my rules to try to get that short-term result. It just never long-term plays out. So yeah, it sucks. It's boring. I mean, I'm losing my mind a little bit here this AM, but I can't force a decision that isn't there. Yeah, so I would say there's kind of two main elements here, right? The back test is essentially what's an idea that I can see or what's a pattern that I can see in the markets, right? That consistently sort of finishes green. So maybe it's every time you see, right, where your P&L would be green if you took a trade, right? Maybe it's you see a high volume candle, right? Strong body. And then it's like, okay, every time we make lower lows through that area, right, it kind of finishes, my P&L would be positive. So your back test is right is, okay, can I find a pattern in the market that repeats itself often enough where I can kind of see 30 examples of kind of how it's behaved? Then it's about studying those sort of 30 examples and quantifying what is the strongest version of them, right? How do they pass? How do they fail? What makes certain of them successful? What makes certain of those setups unsuccessful, right? And then in reality, your actual execution versus your back test is going to be different, right? So maybe you back test something that has like, or you find a pattern that's 80% of the time green if you enter it, but maybe your stress test, right, ends up telling you that you have, 75% or 60% win rate on those plays. So it's okay, find a pattern, right? Trade that pattern, track how you trade it, and then that kind of becomes your back test, right? Because there are a lot of strategies, there are a lot of techniques that if you look back on them, they are essentially always correct, right? If you're using like a lagging indicator, every time you buy an MA cross, right, on a lagging indicator, it's going to look like you should have been successful. So you can take that basic idea and then stress test your execution in sim on paper, write down in a spreadsheet, whatever it is. And then that becomes sort of your stress test. Or, okay, what's my actual success rate when I trade this? You then have like a 60% win rate, and you just filter out to trading 1 to 3 risk reward or better for your plays, then you're going to be wildly successful if you just continue to trade the same way like your stress test. So that's really the objective. And then it's about taking things that you learn, taking things that you see, and sort of applying a little bit more context to them, right? Applying a little bit more sort of information, filtering it out more, refining it better, learning from your mistakes, and kind of slowly improving your stress test to sort of match more the results of your back test. So kind of a multi-part process. Ultimately, if you want to get a more detailed back test, right, you could like code up something in Python, you could, code something and look something back up. But on TradingView, it's not super effective because you can only, when you use like the Pine Editor or the strategy tester, all you can do is buy and close at open and close of the candle. So it doesn't give you a very good indication, right, of what the actual success would be of your entries. So yeah, it's find a pattern, right? Look back, see some repetition, find 30 examples, 100 examples of it, right? See how many times it was successful, see how many times it failed, right? Okay, find a way to track that, and then stress test it to see how well you actually can execute those ideas, and then refine that, right? To make your execution rules, basically make sure you have a positive expectation of then being profitable on that decision, right? So yeah, it's not always going to be super glamorous. It takes work, it takes time to kind of go back, but ultimately that's the sort of main objective, is to have facts, right, for when you're trading things, not sort of just feelings. Yeah, I mean, generally when things don't pull into our entry zones, it kind of sucks, right? So I don't know how you feel about this sometimes, Nitesh, but I feel like those days are the most frustrating. Like I can feel the emotions of like wanting to play the most on these kind of days where I just constantly see things going in my favor, but without following my rules. Those are the hardest days. Yeah, just randomly buying an AMD or a SPY at any chance, what would have been very expensive, or well, would have been profitable, right? But long term, very expensive. Yeah, I mean, if you don't have the skill to code something up, going back manually is going to be your best bet. If you don't want to pay someone to code something up, and the objective is to to look and see what kind of patterns you can notice, right? Because then the more you kind of study the previous patterns, or you study previously how price action behaved, then you're going to start noticing them more often when they start occurring in real time, right? So that's sort of the point of doing it manually, is that you're training your eye of what to look for. That's really the real big element there. And then once you've kind of trained your eye to know what to look for, right, it's okay, how can I now stress test basically that thesis and see how I need to further refine it so that I am successful, right? Trading is purely just a numbers game, right? It's a game of probabilities. And so we have to make all our decisions based on those sort of basically processes, right? Or sort of those basic sort of concepts. So no one's going to win 100% of the time. No one's going to be green 100% of the time, but also means no one's going to be red 100% of the time if they just focus on those probabilities. So your win rate's going to justify the risk reward that you go for. And then it's just about constantly filtering out your plays to have a positive expectation of being successful. I think VC means venture capital in that context, Trevor. Yeah, that's a really good way of thinking about it too, Nitesh, in general, right? Is if I think I've used this metaphor before. If I'm hiring someone to redo my bathroom and I don't know what the price is supposed to be, I don't know what materials they're going to be using, and I'm never going to be happy with the sort of outcome of what they're doing, right? If I'm going to hire someone to redo it, it should be on my terms. So it's the same kind of concept like you're talking about. Should never be surprised about my entry price. I should never be surprised about how much money I lose if I'm wrong. I should never be, surprised for when it hits my profit target, right? Those should be very deliberate decisions. And the more deliberate I can be, the more successful I'll be long term. And the more deliberate I become, right? The more I'm very specifically choosing my entry price, the more I'm very specifically choosing my stop loss area, the easier it is for me to then notice and learn from my mistakes, right? If I can, if I'm constantly doing the same thing, then I'll be able to notice where I'm making that mistake in my process much easier than if I'm, one day playing this strategy, one day playing that strategy, XYZ, right? So I really want to be, I really want to be just putting myself in situations where I'm not compromising essentially those opportunities, right? Because then I'm cheating myself of the opportunity to learn from the trade. Yeah. So yeah, the more patient you can be with your entry, right, then the more that sort of risk reward becomes exponential, right? That's really the objective. That's why like patience is so important when we're looking to enter our triggers. Because if we can get, okay, I mean, the stop loss is 30 cents, but we can get a stop loss of 15 cents, right? Then that only pays out for us long term, right? That makes it that asymmetrical result, right, is what Nitesh is talking about. You know, so the more patient we can be, the more deliberate we can be, the more picky we can be, it'll feel better in the long term. And we'll forget, right? A month from now, you're going to forget about how frustrating today was, as long as you keep following your trading rules on the 19 other trading days that will happen from now until then. So it's a really tough game, right? Because it constantly tries to screw with our heads. It constantly tries to trick us into doing or rushing decisions. And we just can't behave that way. It never makes us money. It is, and it's the opposite of how we've been taught to pretty much do everything too, right? Like I used to always think that it was the amount of hours that you put in that was important, not the sort of quality of those hours, right? That staring at your textbook for 6 hours is going to be an effective way to study. You know, that memorizing all the case law is what you need to be a good lawyer, for example. But trading is the opposite of that, right? It's how can you protect your ability to make good decisions, and then hopefully you can make a good decision. So it's very counterintuitive to, yeah, what human nature is. Sort of why I believe there's no naturally gifted traders, unless like your parents are so autistic that they're like Michael Burry and Michaela Burry. Then you're probably not ever learning the right like mindset or the right sort of structure where you're consistently able to be sort of